After a telephone conversation between the US President and the Israeli Prime Minister, hopes arose that some calm could come in the hottest spot in the Middle East. At least the options for negotiations and even a truce between Israel and Hamas remain on the agenda. As a result, global investors revise their sentiment. At the same time, the government of one of the leading Asian economies announced that it was ready to act around the clock on the currency issues. But traders do not expect any specifics on forex interventions from the financial authorities. Official data showing whether the interference actually took place will not be available until the end of May. The reports on foreign exchange reserves in Japan are based on that data. But it's already clear that one intervention may not be enough. A day after the alleged intervention of the Japanese authorities, the yen had already lost some of its sharp growth against the US dollar. The day before, the yen weakened to about 160, and the dollar-yen pair again found itself in the bullish trend, but was still trading somewhat lower today in the range of 156.00 to 157.60. The most obvious solution to this problem would be to raise interest rates in Japan. If the Bank of Japan does not take this step, the yen will have to give up again, and Japan's Ministry of Finance will likely have to intervene more than once to prop up the national currency again and again. This scenario is realistic since the Bank of Japan's next policy decision will not be released until June 14. Besides, the two-day meeting of the US Central Bank will end tomorrow, although interest rates are expected to remain at the same level. The comments and speech of the Fed's chairman may well send hawkish signals. And in this case, traders will rush selling 6 major currencies against the US dollar. The weakest among them will again be the yen. Fresh data on the US economy recorded high inflationary pressure in the country. Moreover, the main indicators of production and the consumer demand turned out to be unexpectedly optimistic. Thus, some experts even started talking about a possible rate hike. In any case, the first rate cut was postponed to a later date, most likely to the end of the third or even the fourth quarter of this year. So they could be left to wait until a new wave of the US dollars advance across the boat. And today the US currency does not look weak. Its index is trading in the intraday corridor between 105.60 and 106.10. In turn, futures for the main stock indexes S&P 500 fell in the early New York session on Tuesday amid negative sentiment. After a moderate rise on a Monday, Wall Street prefers to wait not only for the Fed's policy decision, but also for official data on the American labor market. Given that the Fed Reserve is focused on unemployment and job growth, these reports will shed light on future policy decisions. In the meantime, the S&P 500 is trading lower within a moderate range of 5,097 to 5,111 points. At the same time, the central banks of the Eurozone and the UK say that they can start cutting interest rates in the near future, as early as June. Until now, economic reports from Europe were losing to the United States. Now it seems that the situation has begun to level out. The Eurozone's economy grew by 0.3% in the first quarter, its fastest pace since the second half of 2022. The data beat market expectations of a slight rise of 0.1% and gave the ECB more room to make future decisions. Data on the annual Eurozone's GDP growth is also positive. The EU economy expanded by 0.4% from a year ago and was twice as high as the estimated increase of 0.2%. Among the largest economies of the Euro bloc, the GDP of Germany and France rose by 0.2%, Italy by 0.3%, and Spain by 0.7%. According to flash estimates, the euro area's annual CPI remained at 2.4% in April, in line with the market expectations. That's annual inflation in the Eurozone is returning to the 2% target. However, core inflation, which is more important for the regulator, fell only to 2.7% in April on a year from the previous 2.9%, an uptick higher than the forecast of 2.6%. The fight against stubborn inflation will inevitably be bumpy, and geopolitical tensions pose the risk of inflation acceleration, and this was stated yesterday by ECB Vice President Luis de Guindos. It seems that now it's the euro's turn to benefit from inflation surprises and positive reports on the economic recovery. As we can see today, the single currency caught a new impulse and finally rebounded from the level around 1.0700. As a result, it outperformed the stronger dollar and rose above 1.0730. Thus, the euro extended the previous rally from the overnight lows around 1.0689 and became the best performing currency not only in the dollar index basket but also in the G10 and the G20 baskets. But the euro's rally didn't last long. In the early New York session, the euro-dollar pair dropped quite sharply to trade in the range of 1.0700 to 1.0720, and the US dollar rose again as the US Bureau of Statistics reported strong growth in business activity. The PMI entered the green zone at 50.3 points. As we can see, high inflation in the Eurozone and strong GDP growth in the first quarter were unable to provide a sustainable impulse for the euro. Moreover, the US dollar is likely to remain steady and firm until the policy statement by the Fed Reserve tomorrow. So, all risky assets as well as the oil prices are set to trade lower in the next 24 hours. The benchmark Brent Crude has already retreated today. As a result, its price slipped by more than $1 in a few hours, having fallen from $88.8 per barrel to below 87.6. Along with the advance in US dollar, the prospects for an improvement in the political situation in the Middle East also put pressure on oil prices. Before the intraday forecast for Brent Crude suggests a decline within the corridor of $87.4 to $88.7 per barrel. You have watched the market review by InstaForex analyst for Tuesday, April 30. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. So see you online tomorrow.